Hey guys, today we're closing out the first quarter of 2022, and I wanted to give you a quick update on our trading models. So, I manage two different investment models on my site, zachscheit.com. One model is very conservative and it sells put option contracts on some of my favorite stocks. The other one is very aggressive and it buys call option contracts for stocks that I expect to trade higher, and it buys put option contracts for stocks that I expect to trade lower. So I like having a barbell approach for my own investments where some of my account is invested very conservatively while some is invested very aggressively, taking on more risk. So the way to do this is then to be able to adjust between those two different styles, how much is invested in each side to kind of fit my own investment situation. Now, both of these models, I wanted to point out, are real money models, meaning that I trade my own account using the trades from these models. For both of these trading programs, I recommend trades to subscribers before I place them in my own account. And that gives my subscribers first shot at executing their trades before I trade my own family's money. So today I wanted to review the first quarter for each model and give you an idea of what different opportunities we're tracking and how those trade ideas have been panning out so far this year. The speculative trading model started the year with a $100,000 beginning balance. And as of Wednesday's close, the model value is a little over $159,000. In this after distributing $65,000 of profit from this model. So that's a gain of a little more than $124,000 from a $100,000 starting balance. Now there's a very important note I want to point out to you. This is not a normal quarter for the trading model. And while the performance does include all winning and losing trades for the quarter, past performance is no guarantee of future results. In fact, I'm very confident that we're not going to have too many quarters as strong as this past quarter was. Now, this aggressive approach to trading has produced some strong returns during seasons when our trades work out, but speculative trading can also lead to significant losses. So never invest money that you can't afford to lose in a speculative trading program like this. We officially started this model at the beginning of the year, so the first quarter is all the data that we have officially for this model, but I've also included our beta track record for the months that lead up to the beginning of this year when the model was only shared with a very few close friends and family members. So let's get into the numbers real quick for this quarter. Now, during the month of January, we had a good mix of profits from both the bullish and the bearish bets in the speculative model. We bought put contracts or bearish positions on expensive and speculative stocks like Roku, Shopify, AMC, and Tesla. And many of these did really well as speculative stocks fell out of favor to start the year on Wall Street. We also bought call contracts or bullish positions on blue chip technology like Google, some semiconductor stocks like NVIDIA, and cybersecurity plays like Zscaler and Palo Alto Networks or PANW. Now, for these long positions, we had kind of mixed results as the overall market correction sent stocks in these important areas lower. And we closed out the month with more bullish exposure, kind of expecting the market to rebound after the January pullback. Now, the market volatility continued in February, giving us a chance to take shots at both the bullish and the bearish side of the market. And we locked in some healthy gains on the bullish side from quality stocks like Costco and Expedia. We also continue to profit from sell-offs for some of the speculative tech stocks like Shopify, Spotify, and also Carvana. One particular trade that's been in play for much of the quarter is a put position or a bearish position on TLT, which is a long bond, 20-year treasury bond ETF. Now remember, bonds fall as interest rates rise, and we're in a period right now where interest rates have steadily been moving higher. We closed out February with an overall bearish posture, but with a few individual bull plays for Expedia, NVIDIA, and drug maker VRTX. Now, we're still a full trading day away from the end of March, but this month has also been a healthy period for our speculative trading model. We were able to close out bearish trades on Shopify, Spotify, Tesla, and we did this as speculative stocks kind of bottomed earlier in the month. And then we changed our perspective on some of these speculative growth names midway through the month. Many of these names had lost huge amounts and were due for a rebound. So those bullish plays actually wound up working out for stocks like Facebook, Roku, and Coinbase, And those were helpful in building some profits. But those profits were also offset by some losses on our bearish Tesla bet. Today, now, as we head towards the end of the quarter, our model is invested in a mixed bag of bullish and bearish plays, and we're also holding a good bit of cash, which can be put to work in new opportunities that arise as we move into the second quarter. Now, this reflects a little bit of uncertainty where the overall market will trade from here. It's hard to tell. There are many different cross currents. We've got the war in Ukraine, we've got higher interest rates and inflation concerns. Those are all kind of bearish ideas that are helping to push stocks lower. This against a very bullish backdrop of low unemployment, a historic economic reopening, and a very healthy U.S. consumer. So again, lots of cross currents moving back and forth. The second quarter will likely be full of twists and turns for investor, and I really am excited about zeroing in on trade opportunities that emerge from those twists and turns. Now, on the more conservative side of the barbell, our put selling model returns have really not been as strong. Our put selling strategy collects upfront payments when we sell a put option contract. In exchange for that payment, we enter a promise to buy shares of stock at an agreed upon price within a set period of time. That's how the strategy works. Now, we only buy stocks if and only if the owner of the put contract chooses to exercise his or her right. And we can also buy out of this promise anytime the market is open by using the market price for the put contracts that we originally sold. Now, this strategy is an overall bullish approach just by nature. So as stocks traded lower during the start of the quarter, the value of our put selling model declined. Now, some of the losing trades included Wynn Resorts and Royal Caribbean Cruises. These were both hurt by Omicron concerns and just a really more challenging travel environment. We also took some losses in Steel Dynamics and Cleveland Cliffs. Both of these are steel stocks that were under pressure as reopening concerns rose. And then a couple other positions that went against us were Roblox and Micron, ticker MU, as high-value tech stocks really sold off, especially at the beginning of the year. Now, ironically, as we move towards the end of the first quarter, some of these stocks have rebounded sharply, and you think, well, why didn't we hang on to those positions? But I prefer to close out positions that are not working, and that's why the model went ahead and realized some of these losses on a few of the names. But as the market has begun to recover, our model has set up new positions in some of these same stocks. Now, as of Thursday morning, March 31st, the put selling model is down a little less than 2% for the year. This compares favorably with the overall return of the S&P 500, which is down 3.09% at the beginning of the day today. Still, I'm a little disappointed to post a negative return in this model, regardless of where the market ends up for the quarter. Now, both the speculative trading model and the put selling income model are open for new subscribers. Some subscribers like to follow the model trade recommendations in their own investment accounts, while others kind of like to pick and choose which ideas make the most sense for their own account. However you invest, I'd like to invite you to try out one or both of these models to see if this investment approach is right for you. Now, I've included links below for each trading model, and the links include full tables of closed trades for each of these models, so you can see how the performance is done over the last quarter. Now, subscriptions to both the speculative trading model and the put selling income model include a 30-day money-back guarantee for the subscription cost. So if you don't enjoy the trade recommendations or the market commentary, no worries at all. You can cancel for a full refund within the first 30 days, or you can get a prorated refund on any unused portion of your subscription after that. Now, one final note, please remember that all investments involve risk. Past performance does not guarantee returns, and the information that I've shown you today is intended to be accurate and transparent to the best of my ability, but there's no guarantee of accuracy and certainly no guarantee that future returns will be anything like past performance for either of these trading models. If you have questions, please leave me a comment below the video or send me an email. My email address is zach@zachscheit.com. I look forward to hearing from you, and I wish you the best of success with your trading as we head into another exciting quarter. Thanks.